Hi, my name is Arjun Naranjan, and today I will be doing an overview of the business analysis for PayPal and Block. PayPal is a company that is based on an online payment platform and has a market cap of $67.12 billion. It is part of the payment processor industry that is anywhere between 46 to 50 billion. Its global competitors include Alipay from China and Adyen from the Netherlands. PayPal has an approximate 35 to 40% of the market share. Square is a payment processing platform aimed at small and medium businesses, has a market cap of 34.19 billion, and the fintech industry that it is a part of is estimated to be anywhere between 113 and 133 billion dollars in 2021. PayPal was founded in 1998 by Peter Thiel and Max Levchin as Confinity, initially developed as a software security for handheld devices. PayPal was launched in 1999 as a money transfer service. It moved into X.com, a financial service company with Elon Musk as the CEO. It changed its name back to PayPal to focus solely on payments in 2001. It was later acquired by eBay in 2002 in a stock swap deal. In 2011, PayPal launched PayPal Here to compete with Square. This is a mobile payment solution for small businesses. They split from eBay in 2015 and became an independent publicly traded company and acquired TO Networks and iZettle in the following years to diversify. PayPal ultimately allowed users to use digital currency such as Bitcoin on this platform in 2020. The drivers for PayPal include the general growth in mobile payments over the last few decades, as well as the rise in international transactions. PayPal also offered secure payment methods, the acquisition of Venmo, and consumer behavior shifts to the digital space helped enable its growth, in addition to the growth of e-commerce. PayPal also was benefited by its ability to form partnerships and third-party integrations with various platforms. Square was founded in 2009 by Jack Dorsey and Jim McKelvey. Their first product was a small credit card reader that plugged into mobile devices. They launched their first mobile app in 2010. And over the years leading up to 2015, they launched several different products, whether it be peer-to-peer money transfer service or a lending service, such as Square Capital, or even a point-of-sale system, such as Square Register. In 2015, they went public, and they even launched Square Reader in 2016, and they launched Square Cash Card in 2017, which is a physical debit card. In 2018, they acquired Weebly, which is a website building platform to expand their services. They even launched Cash App in 2020 and announced plans to acquire Tidal in the year 2021. Square's drivers are similar to PayPal's in that they offer offline and online payments. They have this ability to integrate with third parties, whether it be accounting software, to e-commerce platforms, or business management tools, and they enable businesses to turn smartphones into POS sale systems or point-of-sale systems. The key competitors in the US that we identify for both PayPal and Square that are publicly traded were Fiserv, Global Payments, Payoneer, Evo Payments International, and Shift4. Out of the 5 payments, we see that Payoneer, Evo Payments International, and Shift4 have a relatively small market cap between anywhere from 2 billion to just 4.48 billion. They all had net losses in the year 2022. However, the company with the largest market cap was Fiserv, and this was most similar to PayPal with the market cap of 74.12 billion. And the company had 6 million customers worldwide. So we identified this as a cheap competitor to PayPal. And Global Payments is very similar to Square with a market cap of 32.25 billion and with 3.5 million customers worldwide. Both of these companies are the most financially healthy. Thank you.
Hello, Professor. Inawa here. At this time, I am going to discuss PayPal's current Wall Street outlook with varying viewpoints from financial analysts. PayPal's recent acquisition of Curve, a crypto security firm, highlights the company's willingness to adapt and explore new avenues. To highlight a few key points, the average price target for PayPal stock is $9.74, indicating a potential upside of about 24%. PayPal stock performance has been volatile in recent months. The stock has fallen about 16% year to date. Additionally, 12 analysts have proposed a buy rating, reflecting their optimism about its future performance. Interestingly, no analysts advocate a sell rating for PayPal stock. As for Block's current Wall Street outlook, acquiring Afterpay has drawn positive attention. Here are a few key points. The average target price for Block stock is $85.86, This represents a potential upside of about 35%. Block stock performance has been volatile in recent months. The stock has fallen about 61% since the beginning of the year. 19 analysts have bestowed a buy rating on Block stock, but a single analyst maintains a sell rating. The first cornerstone of PayPal's segment is its core payment segment that includes applications like Venmo and PayPal, which enables individuals and companies to send and receive money easily. The Braintree segment empowers businesses with a versatile payment processing solution. Other segments include Zoom and Honey. In summary, PayPal's business structure has well-defined segments, each serving a distinct purpose in financial technology. The first pillar of Block is their payment segment. Block's point of sale, hardware, and software plays a crucial role in facilitating payments, which also includes the Clover segments. After the Capital umbrella, we find Block's Capital and Block Loan, which are two lending products that provide small businesses with access to funding. According to the recent 10-K filings of PayPal, PayPal operates within the financial services, payments, and data privacy landscape. Therefore, it is subject to many regulations. Changes in this regulation could impact PayPal's operations. The tech company is also competitive in continuously innovating and expanding their offerings. Similarly, PayPal's performance is inherently tied to economic conditions. During recessions or downturns, the company acknowledges vulnerability during cyber attacks. In addition, legal proceedings and class action losses are yet another factor that PayPal must manage. Lastly, I will focus on Block's recent 10-K filings. Changes in regulation forces the company to remain vigilant in understanding the revolving regulatory landscapes. Block faces significant risk factors from competitors, including industry giants like PayPal and Stripe and Adyen. Also, economic downturns or recessions can lead to shift in consumer spending patterns. The digital ecosystem makes it a prime target for cyber attacks. A successful breach can compromise customer data and cause financial losses. Legal proceedings and class action losses are a reality that Block must navigate. Overall, Block's 10-K filings offer a transparent and comprehensive view of its financial performance, risk factors, and a management analysis of the company's financial condition. This concludes my segment of the presentation, and I will be followed by Tony.
PayPal executive compensation. PayPal's executive compensation can be seen here. Compensation is divided between principal executive officers and non-principal executive officers. For PayPal, the principal executive officer is Dan Schulman. For the latest SEC 10-K filing, in addition, there are 7 other officer board members for PayPal. Typically, boards are composed of odd number of members to prevent tie votes. In terms of compensation, Dan Schulman had a base salary that ranged from $1,038,000 to $1,200,000. However, Mr. Schulman's stock award substantially increases the CEO's compensation to a range of $21 million to $32 million during this same period. By contrast, the rest of the board had a base salary of $300,000 to $700,000. Their total compensation amounted to about a third of the CEO's compensation, ranging between $8 million to $13 million. PayPal executive compensation is based on a formula. It starts with a base salary, then it is multiplied by a target incentive package that is multiplied by a company performance measure that uses revenue and non-GAAP operating margins as the factors for multiplying the incentive, as can be seen here. In addition, there is an individual performance cash payout that equates to about 25% of the incentive plan. Altogether, this is the annual incentive payout. In addition, you will find that in the slide a more detailed explanation of the purpose behind the incentive plan. The goal is to align with shareholder goals and improve performance. Block compensation. Next, I will be going over executive compensation for Block Inc., formerly Square. The board here is paid similar total compensation to PayPal. However, The noticeable difference is that they are paid with option awards in addition to the stock compensation. It is also noticeable that CEO Jack Dorsey only takes $2.75 of total compensation. It also should be noted that he is a majority shareholder of the company. The earnings call. Now, earnings calls are quarterly public meeting calls where the management explains the financial performance of the company with investors and other interested parties. PayPal earnings call started with the CEO, Dan Schulman, going over total payment volume for PayPal, which the total transactions that the company processes with its services like checkouts and other services. Next, the CEO highlighted investing in machine learning and AI and how it will improve risk management and combat fraud. In addition, he noted that there was a 10% increase in revenue and the need to reduce overall cost structure. His priorities are core checkout, unbranded processing, and digital wallet adoption. After the CEO spoke, the CFO, Gabrielle Rabinovich, spoke about similar subjects and added growth in origination fees for buy now, pay later, and the need to expand unbranded services while reducing expenses. The Block earnings call. The Block earnings call started with Jack Dorsey, explaining the focus on customer retention and the reduction of cost of business through stock compensation. He emphasized the need for simple communication conventions. He spoke about the constant state of global crisis. He then segued to building business in the global South, like Africa and South America. He is focused on AI and cryptocurrency. Next, the CFO spoke for Block. Amrita Ahuja spoke about and explained the company had about $1.71 billion of gross profits, and the Cash App segment earned about $931 million. The CFO distinguished different channels of business and services by in-person versus online, emphasizing that in-person services had grown. Lastly, she cited the growth in buy now, pay later services.
I'm Darcy Yaley, and I'll be talking about the financial analysis of PayPal and Block, formerly known as Square, using their balance sheets and statements of operating income from their latest 10-Ks. I'll give you a few moments to look at the balance sheets of Block Inc. and PayPal Holdings Inc. You'll notice that Block's is presented in thousands, while PayPal reported theirs in millions. The spacing for PayPal was done to align some numbers with Block's. Here's the income statement for Block Inc. and again, PayPal Holdings Inc. The spacing for PayPal was done to align some numbers to Block's. Keep in mind that Block's numbers are in thousands, while PayPal's are in millions. Funds payable at 68.6% outpaced funds receivable at 63.2% for PayPal. Goodwill and intangible assets make up too significant a portion of PayPal's non-current assets at a combined 56.6%. PayPal and Block likely overstate goodwill and other intangible assets as occurs in the tech sector. Settlement and consumer receivable and customer funds combined for a total of 47.8%, which is less than customers payable at 65.8% for Block. Too much of Block's non-current assets at 88.8% are goodwill and intangible assets. PayPal had a nearly 50% increase on the cost of transaction and credit losses. There was a significant increase in restructuring and other charges from 2021 to 2022. Like many tech companies, there were headlines in May and in August of 2022 that spoke about broad worldwide layoffs, such as PayPal's job cuts cost the company $71 million in the second quarter. Reductions expected to save PayPal $260 million for the year. PayPal was aiming to enhance their operating efficiency. Most of the restructuring costs were for severance pay and employee benefits. Bitcoin revenue and costs dominate Block's income statement. Bitcoin is volatile and a gamble. It has made money over time, but Block needs time to invest. Here are the key ratio and trends for PayPal and Block. The higher an EPS, potentially the greater profit for an investor. PayPal's EPS is $2.32, and Block's EPS is a negative 58 cents. A current ratio of greater than 1.5 generally indicates ample liquidity within a company. PayPal's current ratio is 1.28, and Block's is 1.85. Using debt to finance assets shows an aggressive capital structure. Both PayPal and Block use debt to finance their assets. And here's Daniel with our conclusion.
All right, thanks Darcy for your insightful information. We are now in part 3 of our project. This part will be our investment and lending decisions. Before we give you the rationale for our lending and investing decisions, we are gonna talk about these ratios that we use for our loan consideration. On the left, you can see return on equity, current ratio, capital structure leverage, earnings per share, and price to earnings. These 5 ratios are the 5 ratios we have concluded to use to justify our conclusion for loan. On the flip side of that, we have 4 ratios that we use for our investment consideration. Those 4 ratios are on the left. They are capital structure leverage, return on equity, profit margin, and operating margin. These 9 ratios that I just talked about are the most concrete way for us to conclude our decisions for investing and for loaning. With that being said, here are our decisions. Our rationale to invest. From 2021 to 2022, the return on equity of both Block and PayPal decreased. However, their leverage levels went up. While PayPal return on equity dropped significantly, the difference between the 2 companies' returns on equity decreased similarly from 2021 to 2022. For instance, PayPal's return on capital structure increased by a small amount, while its operating margin also fell. However, growing revenues would indicate that this is a growth stock regardless of other indicators. The increase in this factor offset the negative effects of leverage reduction on its return on equity. Therefore, PayPal would be an excellent stock to invest in and would be our decision to invest in. Our rationale to loan. Compared to PayPal, Block has a higher current ratio. They have a 2022 current ratio of 1.85, which is better than the previous year. This is mainly due to how it has more cash on hand. However, PayPal has more revenue and is a larger company. This would suggest more capital to settle debts, as may be seen in the debt to equity slide, which we highlighted in slide 30. Its profit margins are also high enough to overcome the company's negative aspects. Through 2022, PayPal's revenue has grown. However, over the next couple of years, Block revenues may increase as well because their current spending looks like investment in the future. Their current ratio plus steady growth in revenue and potential market growth suggests that it would be safe to loan with Block for the foreseeable future. So now you have our decision on who we would invest in and who we would like to loan to. And with that being said, we want to thank our professor for giving us this insightful project, and hopefully he has enough fun watching it as we had constructing it. And I just want to thank my team of Arjun, Tony, Darcy, Hernaro, and myself. And that is our decision, and that is all we have. Thank you.